Sean Ruhmann, right now oil's around $54 a barrel. Do you think that's the correct value?
At NEPC, our view is that we expect oil to get back up to the $70 to $75 range. Now, we think that's going to take some time. We think it's going to be volatile for the better part of this year into next year. But we think at that point, supply-demand forces will start to balance and it will push the price of oil back up.
And what happens if it doesn't get there? Who gets hurt the most?
So if it doesn't get there, and even getting there slowly as we think it will, I think there's going to be a fair amount of distress in the energy sector. Public E&P companies, services companies, we think those get hurt in the near term, but we think as it rebounds, there are a lot of companies that do actually survive and don't have problems.
Well, distress also makes for a lot of good M&A action. We saw Shell recently buy BG. So who's going to be the buyers? Who's going to be the sellers? Take me through the mergers and acquisitions that are going to happen if and when oil doesn't get to $75.
Yeah, we would expect that there will be more M&A across the sector. We think in the near term that we don't expect it to be a massive volume of it. We think if you are a typical owner of oil assets, either private owners or public E&P companies, we think in the near term you probably don't want to make a knee-jerk reaction and sell your company or sell prime assets. So we think over the next 6 to 9 months, a lot of companies will be okay. But as oil stays low longer, that's where we think you're going to get more pressure, and we think you'll start to see more M&A activity.
So how are you investing right now with all this in mind?
Yeah. So the way we've approached it at NEPC is we've tried to think about the range of opportunities you can invest in given the dislocation. So that starts with just commodities. It moves into the public space, so public E&P companies, MLP companies, across the capital stack, so equities or credit, and then private equity. Our view is, given that path of oil where we think it's going to be volatile in the near term and rebound at some point next year, we think right now a good play are long-short commodity strategies to trade on the volatility. We also think that long-short equity strategies, mainly focused on public E&P companies and services companies, is attractive. Long bias strategies in the same area. And then we think as oil continues to stay low and volatile, we think it then morphs into more of a pure private equity play, where you can have private equity firms that start to either help recap companies, provide credit to them, buy assets from them, or potentially take them private. And so we think that's an opportunity that starts to morph towards the latter end of this year and into next year.
And then finally, what about high yield? Because high yield really got smashed over the course of the winter when oil came down. A lot of worries that there's a lot of bad paper out there. Your view? Yeah,
we think that's an attractive opportunity. The one consideration we have with high yield is there's been a lot of capital raised to target that area. So can you really capitalize on good options or good investments given the amount of capital focusing there?
All right, thanks a lot, Sean.
Thank you for having me.
Thank you for watching The Street.